Hello everyone, my name is Moniaga with NPM 2342045 and my teammates are...
Perkenalkan, nama saya Evelyn dengan NPM 2342011.
My name is Celine Diorra and my NPM is 2342081.
My name is Jannieca Verollyn and my student number is 2342082.
Today we will be explaining and showing our answer third question given by Miss Satyopi. So without further ado, let's start.
Nomor 1 pertanyaannya, what is a cost object? Give some example. A cost object is anything for which costs are measured and assigned. It can be a product, service, project, department, customer, or any activity or entity that consumes resources and generates costs. The example is product. Costs assigned to individual items produced by a company, such as a smartphone or car. The second one, service. Costs associated with providing a specific service, such as consulting or healthcare. The third one, projects. Costs incurred during the execution of a specific project, such as building a bridge or launching a marketing campaign. What is an activity? Give some example of activities within a manufacturing firm. An activity in the context of a manufacturing firm refers to a specific task or operation carried out as part of the production process. The example is the first one, like production, monitoring goods or product according to specification. The second one, quality control, inspecting and ensuring the quality of materials and finished products. The third one, inventory management, tracking and managing raw materials, work in progress and finished goods. The fourth, supply chain management, coordinating the flow of materials, information, and finance across the supply chain. The fifth one, maintenance, performing regular upkeep and repairs on machinery and equipment. The sixth one, research and development, conducting research and creating new products or improving existing ones, and etc. What is a direct cost and indirect cost? A direct cost is a cost that can be directly attributed to the production of a specific product, service, or project. These costs are typically variable and vary with the level of production. Example of it in manufacturing include raw materials, labor directly involved in production, and equipment specifically used for manufacturing. On the other hand, an indirect cost is a cost that cannot be directly traced to a specific product, service, or project. Instead, these costs support the overall operation of the business and are often referred to as overhead costs. The example of indirect costs include rent, utilities, administrative salaries.
4. What does traceability means? Traceability is the ability to trace all processes from procurement of raw material to production, consumption, and disposal to clarify when and where the product was produced by whom. 5. What is allocation? Allocation generally refers to the distribution or assignment of resources, such as money, time, or material for a specific purpose or task. In various contexts, it can refer to the allotment of funds in financial planning, the assignment of tasks in project management, or the distribution of research in computer programming.
Number 6. Explain how driver tracing works. So, driver tracing is the use of drivers to assign costs to cost objects. In a cost assignment context, drivers are observable causal factors that measure a cost object resource consumption. They are factors that cause changes in resource usage and thus have a cause and effect relationship with the cost associated with the cost object. Number 7. What is tangible products? So, tangible products are the products that we can feel, we can see, and also we can touch. For example, like books, groceries, and etc. But in this case, a tangible product is a product that has a physical substance. For example, include an inventory, a building, rolling stock, manufacturing equipment, and also office furniture. Number 8. What is services and how it differs to tangible products? So, while products can either be tangible or intangible, so services are typically intangible. So, it was like something that we provide or perform to another person. So the difference between products and services are based on different factors, including tangibility, perishability, and also variability.
Here to give 3 examples of product cost definitions and why do we need different product cost definitions. First questions. Direct material cost. This refers to the cost of the raw materials or components that are directly used in the production of a product. It includes the cost of purchasing these products or materials, shipping fees, and any other costs directly associated with acquiring the materials needed for productions. Second one is direct labor cost. Direct labor costs represent the wages and benefits paid to the workers who are directly involved in the manufacturing assembly of a product. The third one is manufacturing overhead cost. Manufacturing overhead costs are indirect costs associated with producing a product that cannot be directly attributed to specific units of production. These costs include expenses such as rent for the production facility, utilities, maintenance costs, and etc. Why do we need different product cost definitions? First one is cost analysis and management. Different product cost definitions allow businesses to analyze and manage costs from various angles. For instance, understanding direct material costs versus labor costs versus overhead costs help in identifying cost-saving opportunities and optimizing production processes. The second one, price setting and profitability analysis. By using different cost definitions, businesses can better determine the appropriate pricing for their products and assess their profitability accurately. The third one is decisions making. Different product cost definitions provide relevant information for decision making purposes. And the last one is inventory valuation. Different cost definitions are used for valuing inventory on the balance sheet. Identify the 3 cost elements that determine the cost of making a product for external reporting. Direct materials represent the tangible inputs that become part of the finished products. Example, include raw materials, components, and supplies directly incorporated into the product. As for direct labor costs, represent the wages and benefits paid to the workers who are directly involved in the production process. Direct labor costs are typically calculated based on the time spent by workers on specific production tasks. Manufacturing overhead costs encompass all indirect manufacturing costs that cannot be directly traced to specific units of production. These 3 cost elements, direct materials, direct labor, and manufacturing overhead, are commonly used to determine the cost of making a product for external reporting purposes, providing stakeholders with insight into the cost structure and profitability of the company's products. How do the income statements of a manufacturing firm and service firm differ? From revenue sources, manufacturing firms generate revenue primarily through the sale of tangible goods they produce. Revenue is derived from the sales of finished goods. And as for service firms generate revenue by providing intangible services to clients or consulting services like legal services, healthcare services, etc. And then cost of goods sold. Manufacturing firms incur costs related to the producing goods, including direct materials, direct labor, and manufacturing overhead. These costs are categorized as cost of goods sold and are directly associated with the production of tangible goods. And for service firms, do not have a cost of goods sold in the traditional sense, as they do not produce tangible goods. Instead, they incur costs related to providing services, such as labor costs, salaries or service providers, administrative expense, marketing expenses, and other operating expenses. Inventory considerations. Manufacturing firms typically maintain inventory of raw materials, work in progress, and finished goods. The cost of goods sold include the cost of materials used in the productions, as well as the cost of goods manufactured and sold during the reporting period. As for service firms, they do not typically maintain inventories of goods. Instead, they provide services directly to customers as needed. Therefore, there are no inventory-related costs included in the income statement. Gross profit margin. The gross profit margin for manufacturing firm is calculated as the difference between net sales revenue and the cost of goods sold. It represents the profitability of producing and selling goods. As for a service firm, the gross profit margin for a service firm is calculated as the difference between net sales revenue and the direct costs associated with providing services. It reflects the profitability of delivering services to the clients or customers. Finally comes to the end of the videos. Hope you guys enjoy it and hope you guys gain some knowledge from our videos. Thank you for watching. Goodbye!